Another hour, a good part of the Toronto left is going to melt. Okay, I'm going to. I want to start with just elaborating a little bit on what Leo and I actually say about crises, so it doesn't seem like we're just taking a Pollyanna. I'm sorry, so it's not. Doesn't sound like we're just taking a Pollyannish view. So I'm going to start with a few things that Leo and I have said about crises, and I want to emphasize that when we think about what's going on, we're experiencing the making of global capitalism, which is still being made, and we're seeing a particular kind of empire that hasn't existed before. And we have to be very careful about putting economic facts into this so we don't end up to take an economistic perspective on this. And I think that everything that people have been saying here has been very important in that context. And I'm going to conclude with where I really disagree with David on. First of all, crises are endemic to capitalism, so another recession in itself isn't particularly interesting. And Leo and I have gone further. We've actually argued that in this new era and under this new empire, there's going to be more crises with larger effects at a certain level. And that's for two main reasons. One is that the U.S. isn't omnipotent. This isn't an empire that is just being run by the U.S., by somebody in Washington. It's run through other states, which makes it very complex, and it means that what happens in other states, such as what happens in Europe with the militancy of the German working class, the French working class, and how the central banks respond to that will be very important. So what happens through other states is very important. And the other thing is that this particular kind of empire at this point depends very much on finance for discipline, and finance is inherently volatile. So there are going to be crises. What we've tried to add to that analysis is that we also have to do an analysis of whether those crises can be contained. And that starts with an analysis of the evolution of the American state and the evolution of its capacities in the Treasury, in the Fed, etc., and capacities that are still evolving, and crises through which they learn. That there is a capacity that the American state has. Second of all, that there's a material context in which there is a level of integration that we should not underestimate. And I think that David is quite right to emphasize that it's a complex level of integration, but we should take seriously what the internationalization of the state means and in the internationalization of capital. So I'll just give one quick example. When we talk about the complexities, we often mean that the other states still exist. And that's true. And that the nature of competition means that competition is expressed through other states politically, and that adds complexities. But what competition has come to mean today is competitive spaces. It means, for example, that Canada is trying to make its space into a competitive space, whether that's American capital or Canadian capital, most often, in fact, American capital. And in the process of doing that, it's establishing conditions within Canada that reinforce global accumulation. And the conflict is, in fact, is over class. It's creating the kind of working class within Canada that will make it attractive for foreign capital to come, of what other kind. It isn't a conflict between nations or between states. It's actually part of the reinforcement of the internationalization of the state and the internationalization of capital. Third of all, and most of
I'll get you some more.
yeah, please. One of the crucial things that the United States has is imperial labor flexibility. It isn't limited by what its working class could do. If the American working class today were in fact militant, threatening to gain higher wages, putting the issue of inflation caused by wages on the agenda, they'd have to raise interest rates. And if they raised interest rates in the present context, you'd have a real mess. They don't have to worry about that. They have the autonomy not to worry about their working class. They've done almost virtually anything they wanted to this class. And fourth of all, it's not just the capacities in the state, it's also the capacities outside the state. The depth of American financial institutions and markets are crucial here. They're going to go through this. A lot of them are going to take very large hits, but they have the capacity to survive it. Other countries wouldn't have that capacities. And finally, there's the strength of industry itself, which we haven't talked about. One of the points that David made that's very important about the Americans not just being able to print dollars. Well, this was evident in the 70s. If the U.S. was just going to print dollars, then there was going to be inflation. Dollars, Americans, Wall Street was already pulling out money from Wall Street. What stopped that flow was the American state intervening to say we're going to establish the confidence of business in the United States by breaking the working class and showing that we're going to restructure in a way that accumulation can take place. So there is a discipline on American finance. They can't just print dollars. They have to establish the confidence of business in the U.S. So the strength of American industry is very important. And just a brief note in terms of what Chris raised. Although I think generally I agree with his point about you have to understand this in terms of relative labor rates, but people should also appreciate that one of the reasons for the U.S. having such a large deficit isn't just about relative labor rates, but it's very much about how much higher consumption is in the States, both because of population and because of debt. And that U.S. exports for the last 3 or 4 years have been growing at double-digit levels. And that's actually been in high-tech, in high-wage sectors. And that's, you can get around that by talking about unit labor costs rather than. But the strength of the American economy has been very important as a foundation for this. Okay, the second thing I want to emphasize is we often think about how strong the U.S. was in 1950, late 40s, and we compare it to today, and we see all kinds of problems. Particularly the arguments often made in 1950, they had half of world production. Today maybe it's 20% and declining. Again, we have to think of this in terms of the making of global capitalism and empire. And from that perspective, I want to emphasize 3 or 4 points.